Good evening, friends. It's my honor to meet everyone here again. Thank you, friends, for your support. I would like to say a warm welcome to those who join us for the first time and other friends that was here on my previous class. Welcome to our Patreon Live sharing class. It's a great honor for me to be able to share with you more knowledge and hope everyone is able to learn something by the end of my class. Just a sneak preview. Today, there is a topic that I want to share with everyone, and this topic was asked by many friends. So, stay with me throughout the class to find out more. Besides that, I will also continue to do my best to share more high quality stocks and lead everyone to a better future. Thank you once again. Okay, today's contents, we will start off with stock trading and so on and so forth. Total, we have 6 contents today. Stock trading. What is stock trading? Okay, before I start sharing today, let me answer a question that many friends have asked me through private messages. Why do I only recommend the regular stocks and never recommend futures or options to anyone? Today, I will give you the reasons on why I don't recommend futures and options. I will also share with everyone why I only focus on stock trading. There are a few reasons. The reasons are, we have a lot of members in our group. As of now, we have a total of 60,000 members, and the number will keep growing. There are significant differences in everyone's technical abilities, risk control, capital management, and psychological adjustment or management. It will be very difficult for me to fully focus and share on one financial instrument if I have to guide or share other financial instruments with everyone. This will also confuse new members about what topic or content that I am sharing. One of the most important points is comparing with other financial instruments. Stocks are the safest. It also can be said that stocks are the safest type among all financial products. My personal principle is to maximize profits under the premises of higher safety, and also I am here to guide or help everyone to make money and not here to teach everyone everything about the financial instruments. Next, I will share with you in more details why we choose stock trading. There are a few points. Point 1, focus. Simple and easy to understand. Stable income. And investment diversity. Let's start off with focus. Focusing more can help us achieve success more easily. True, though it's not a guarantee. Let's take Warren Buffett as example. Although throughout his life, he actually only focused solely on one thing, which is buying stocks. Of course, his stock purchases are different from ours. He buys stocks to acquire ownerships in companies. But isn't that still buying stocks? Number 2, simple and easy to understand. Because it's easy to understand, stock trading is relatively simple and more suitable for novice investors. Some of our group members are beginners, and for them, perhaps what the most important thing right now is not how much money they can earn, but rather learning. Of course, making money is a necessary goal, as everyone needs to earn money. The key is how you make the money. Stable income. For long-term investors, stock investments can provide stable returns, especially through dividends. However, this applies to a very small portion of the market. I won't hope for individual dividends income because it's too slow to earn the money. Number 4, investment diversity. The stock market offers a wide range of investment opportunities involving different industries and companies. Now, Buffett, his investments cover areas such as insurance, energy, consumer goods, and railway transportation. And only recently, he has actually ventured into technology sector. So, these are the reasons why I want to lead everyone to focus only on stocks. Okay, that's all for this topic. Let's take a look at the overall market trend for today. The Nifty Index. India equities indices ended lower in the volatile session on 12 December, with Nifty around 20,900. At close, the Sensex was down 377.5 points, or 0.54%, at 69,551. And the Nifty was down 90.7 points, or 0.43%, at 20,906. About 1,424 shares advanced and 1,822 shares declined, and 83 shares remains unchanged. The biggest losers for today will be BPCL, Apollo Hospitals, Maruti Suzuki, Sun Pharma, and Enrich Motors, while the gainers includes HDFC Life, Ultratech Siemens, Bajaj Autos, SBI Life Insurance, and Axis Bank. Except for metal, all other sectoral indices ended in the red, with capital goods, oil and gas, power and realty down 1% each. Today the market finally started to adjust, with both major indices falling sharply. However, this is only an adjustment within a bull market, so this kind of adjustment is within our expectations. When I share some thoughts with everyone this afternoon, I mentioned that the current index prices are on the higher side. And when the prices are higher, what should we do? Most is decrease the amount of stocks in our hands. The higher the price, the fewer stocks one should hold. This is truly selling high. There's an important point to note here. Why did I specifically mention selling in batches at high levels? It's because it's impossible for everyone to accurately predict the market top. We can only sell in batches at relatively high levels so that our average selling price may be higher. And what about when the market is at a phase of temporary bottom? Clearly, we should buy in batches. In principle, it's the same. This is the only way to truly sell high and buy low. Let's take a look at the index. Today, the Nifty index can basically be said to have covered the fluctuation range of the previous 4 trading days. This is rather observed adjustments signal. At the same time, we also notice that today's candlestick chart has fallen below the MA5. Do you remember what I say? When it falls below the 5-day moving average, it will enter a short-term adjustment phase. Here, I'm only referring to the short term. After entering the adjustment phase, the market will either move sideways to digest the space over time, or there will be a short-term significant adjustment. If the significant adjustment occurs, then the end of adjustment also be quick. Okay, as for Sensex, today the Sensex index is slightly weaker than the Nifty index, primarily evidenced by the Nifty index hit a new high, but Sensex did not. And the candlestick chart from the previous trading day formed a doji, followed by a bearish candlestick today. This combined pattern is not favorable for long positions, indicating a short-term correction. Point number 2. Similarly, today the Sensex index also fell below the 5-day moving average, aligning with the Nifty index in the regard. I've mentioned before that the direction of these two indexes are completely aligned, with at most some minor differences. Understanding the pattern of one index essentially means being able to interpret the pattern of the other. Alright, this is where I will conclude the analysis of the indices for now. Let's move on to the next topic. Market capital. Let's take a look at today's market capital. The funds flow. Why do we need to look at the funds flow? Because this is a direct factor in determining price movements. Everyone knows that in the stock market, stock prices need funds inflow to rise. If funds flee, prices will definitely fall. This means that regardless of the overall market sentiments, microeconomic fundamentals, or how good individual stocks are, there must be fund inflow to drive the price to go higher. Of course, logically speaking, as the economy continues to grow stronger and companies make substantial profits, funds are more willing to invest in order to reap higher profits, because capital is always profit seeking. This chart shows the inflow and the outflow of funds for the foreign institutional investors, which is FII, and domestic institutional investors, DII. From the table, if you carefully look at the total inflow and or outflow of funds from the FII and DII, you basically find that if the total funds are net inflow, then the index is basically rising. If the funds are net outflows, then the index is basically falling. The market trend and the direction of the funds flow are usually quite consistent. Why does this situation occur? Because FII and DII funds are both institutional investors. Their fund size are relatively large and concentrated, so they can exert greater force. Of course, sharing this data is just a provide awareness. After all, a day data does not represent much, because even large funds engage in buying or selling action, they cannot keep buying without trading. Buying more today and selling more tomorrow are short-term actions. This data can be used for reference, but should not be only based for judging the market. And for this, it's a statistic for the month, market capital. I see this data. The flow of funds from both foreign institutional investors, FII, and domestic investors, DII, is being compared. This chart is based on monthly statistics, and its reference significance is much greater than the daily level. In November, when the index rose sharply, everyone should remember the significant rise. I can tell from the data in the chart that in mid-November, both FII and DII were net buyers at the same time. Take a look at the data. In the past few months, only June and November had both FII and DI as net buyers. So the candlestick chart for these 2 months must show an increase. The difference lies only in the magnitude of the rise. If we combine this statistical table with the index chart, we can definitely see more detailed information. In the months of August, September, and October, one of FII and DII was buying, while the other was selling. From the situation at that time, the index was in a state of fluctuation. During these 3 months, as FII at a high level, so stocks to DII. At that time, FII seems to have a upper hand, but life is always changing because FII sold heavily in the previous 3 months. You can see that it finally started to buy in large quantities in November. It can be said that in the stock markets, big rise in November, FII contributed significantly to the momentum. Here are 2 points to share with everyone. The identities of the buyers and sellers can change at any time. Any seller is potential buying force in the future because after selling stocks, they always have to buy again. 2. Do not focus too much on a single or few transactions in a short period of time. This will not affect your long-term profit data. Take FII for example. In August, September, and October, it seems to be selling smartly. But in the next phase of trading, it immediately turned into a buyer again. So, in November, DII did not make too much purchases. Just wait for FII or other forms of fundings to drive the rise. Let's move on to international and domestic financial news. News is also an important part for stock trading. We need to read up the news and understand the news. So let me share some news with you. S&P Global Rating has stated India is expected to become the 3rd largest economy by 2030. And we anticipate it will be the fastest growing major economy over the next 3 years. Currently, India is the 5th largest economy in the world, following by the United States, China, Germany, and Japan. The report mentioned the most significant challenge will be whether India can become the next global manufacturing hub, which present a massive opportunity. Developing a robust logistic framework will be crucial for India's transition from a service-driven economy to a manufacturing-dominated one. SP Global Rating also mentioned that the thriving domestic digital market could drive the expansion of India's high-growth startup ecosystem over the next decade, especially in the financial and consumer technology sectors. The report additionally stated that in the automotive industry, India is ready to achieve growth based on infrastructure, investment, and innovation. We have always said that the stock market is a barometer of the economy. Corresponding, of course, when the economy is robust, the stock market will definitely continue to rise. Regarding the development of the Indian economy and the performance of the stock market, we have always been very optimistic. Okay, for friends, the current stock market is showing strong growth, and this trend is expected to continue for many years. This is the dividend that time gives us, as well as dividend brought to us by the national development. Therefore, as an individual investors, we should consider is how to earn profits from this market. Okay, I'll share one more news with you guys. Okay, three noteworthy things have happened. Okay, this news was actually by Wilhelm Desai. Yeah. Okay, three noteworthy things have happened. First, we have unparalleled macroeconomic stability. As a country, we have our approach to address inflation. This news was by this guy, okay? So I just share some news about what he says. Second, is the focus on profits. He thinks the current government announcement of lowering the corporate tax rate in 2019 essentially signifies that we are in this kind of economic model. Where are we striving? To increase corporate profits, as this will bring more investments, more employment opportunities, and virtuous economic cycle. This is more reliable way of achieving growth than taking on social spending and consumption. The third thing is the shift of occurrence in 2015, when allowed retirement funds to invest in stocks. This is something very similar to what President Ronald Reagan did in 1980s, when he allowed US 401k plan to invest in stocks, which was followed by a 20-year of bull market, ultimately ending with a Nasdaq bubble, when the index traded at 100 times the earnings. We are far from that. Due to our different population structure, he thinks that this is not a 20-year story for India, but this could be a 40-year story. So the bull market is well supported. The Indian market was actually performed quite well over the time. Over a 25-year period, the MSCI India Index has had a compounded annual growth rate of 10% when measured in US dollars. The US stock market, considered an investment haven, has risen by 6.2%. This is where India has done really well. And he believes there is a reason to expect that we will continue this path. Okay, that's all for the news. Let's move on to the next topic. Okay, today I will share with you on some stocks I choose today. Like I recommend this in the morning. Okay, today I recommend this new stock. Today I recommend the stock Clean to everyone. From the closing situation, today's trend looks quite good. In fact, that the price I recommend today is relatively low. Of course, some friends may not have bought it at the first time, due to various reasons. But as long as the stock price is rising, you do not need to worry. about a little bit of differences in the price. Okay, let's take a look at the chart. Everyone, take a look at the chart. This is a daily candlestick chart. First, look at the 2 points. The round upward, 2 points here. First, this round of outward movement basically started from the bottom, mark 1 and 2. Okay, which is this one is a support line. Okay, then the price corrected. However, because of resistance and support are interchangeable, the original resistance line has become the support line. I did speak about support and resistance on my previous class. Okay, and the price was supported here, so we saw a sharp rebound today. Second, let's take a look at the MACD index. Okay, below MACD. Can everyone see clearly? I've talked about the classic buy signal of MACD before, if you guys still remember. The standard MACD fast line and slow line don't have a depth crossover, which is over here. Okay, and eventually regains an upward trend. It went up. We can apply this trading technique here again. Actually, after learning the method, friends, you guys actually should practice more and apply more on to learn how to use it. Okay, let's move on to the weekly chart. Okay, the weekly chart of this stock. In the weekly chart, the support line at the bottom can be seen more clearly. The stock is currently clearing in an uptrend. At the same time, you might have also noticed there is a buy signal in the MACD indicator, which is here. Okay, although it's not entirely precise, the difference is not significant either. Overall, the stock price is currently relatively low and the potential of an increase is enormous. You can simply buy and hold. Here, I'm just sharing some technical characteristics or performance of this stock with everyone. Next, let's take a look at the company situation of the stock. Clean Science Technology is engaged in the manufacturing and sales of various chemicals, mainly including MEHQ, guaiacol, and for MAP. The company caters to both domestic and international markets. In 2022, the company established a new wholly owned subsidiary named Clean Fino Chem Limited, which is CFCL, to produce specialty chemicals including the HALS series. Subsequently, an additional equity investment of 550 million rupees in CFCL. During the 2021 to 2022 period, the company launched 2 new products, namely PBQ and TBHQ. In 2022, the company started production of the 2 new products in Unit 3. In 2022 and 2023, the company commercially produced HALS 770 and 4-hydroxy tempo in Unit 3, with a total capacity of 2000 MT in December 2022. The production capability of MEHQ, guaiacol, and BHA expanded by 50%. In March 2023, the company commissioned a 5 megawatt solar power plant. As for myself, I think the company investment in the new solar plant is a highlight. Although it's not a very large, it's a move forward towards renewable energy, which is the direction of the industry development. The company's operations are very impressive. We can see that both the revenue and net profit growth are very, very stable. So, what are you waiting for? This stock, we should start buying. Okay? Let's move on to the next stock, which is Kota Bank. Okay, let's take a look at Kota Bank. Kota Bank engaged in commercial banking, investment banking, stock brokerage, auto finance or financial, asset management, and life insurance. The company has excellent operating performance and various economical indicators are steadily rising. As for today's stock price, has experienced a slight decline due to the overall sector impact, but the actual drop is not significant and still falls within the normal price fluctuations. From a technical chart perspective, there are two classic technical patterns show up in the chart. One, the formation of the bottom head and shoulder patterns, which once formed is difficult to change its trend direction. And the current trend direction is upwards. Okay. On 4th of December, there was a large bullish candlestick representing a standard breakthrough pattern on the resistance level, which is this. Okay. Even if the price undergoes a correction, it is a confirmation retracement after breakthrough the resistance level. Once confirmed, it will resume its uptrend. The key is that our cost price is not high, so it also provides us with a certain safety margin. Let's move on to the weekly chart. Okay, let's take a look at the weekly chart candlestick for Kota Bank. Previously, I shared with everyone that we are willing to study and view larger time frame, mainly because we study the market and stocks within a larger time frame so that we can be less affected by the short-term influence. From the chart, it can be seen that the stock from a larger framework exhibits a multiple bottom pattern. During the formation of the multiple bottom, the stock price has been oscillating within a relatively standard range. Regarding the upward movement, the longer the period of oscillating and consolidation, the larger the potential of future upward movement. Although the price experienced a slight retreat today, it does not affect our holdings of the stocks. Everyone should just continue to hold the stock. Next, let's take a look at the net profit chart of this Kota Bank. The company has a strong ability to sustain stable profits, which can be seen from its net profit chart, showing a steady increase over the past few years. Whether it's a public company or a private one, the growth rate of the net profit is a very important performance indicator. The crucial to note that while net profit is very important, it's only the measure of performance. For some growth stocks, for their profit-making abilities may not necessarily be strong because they are in growth phase. However, their stock price should still rise steadily. Let's move on to the next stock. Saregama is also one of the stock that I recommend. Okay, for this stock, it seems like we are analyzing the stock performance of Saregama. Based on the daily technical chart, it appears that the candlestick on the 17th has signaled a bottom formation. There are currently two technical features on the daily candlestick chart. One, the candlestick on the 17th has broken through the downward trend line. Two, the stock formed a clear bottom signal on 26th October and 1st of November, which is over here. Okay? And the stock price has yet truly to start an upward breakthrough, because it's, you can see, come up, it just goes sideways. Okay? Today, the stock price has declined alongside with the market index adjustment. However, even though there has been a drop in price today, it's within the range of the oscillation. This kind of oscillation within the range does not affect the directional trend of the stock, so there's no need to worry. Let's take a look at the weekly chart. And there are 3 points in this chart. Okay? At point number 1, which is over here, the trend line is a decline trend line. Okay? Declining. And the price of the stock already broke above the trend line several weeks ago, indicating that the stock previously downtrend no longer exists. Right? It breaks. Okay? Point number 2. Over here. At point number 2, we can observe that the fast and slow line of the MACD indicator are about to cross. And if the weekly candlestick chart remains steady this week, then next week the MACD indicator fast and slow line might experience a golden crossover. And once this happens, I believe you guys would know what will happen, right? Okay, at point number 3, which is here, a bottom signal candlestick appeared near the previous low. Okay? Which you should all recognize. Today, due to overall market adjustment, the stock price experienced a decline, but it does not affect its trend direction. Okay, so it's okay for us to continue to hold this stock. Okay, let's move on to the net profit chart. As for Saregama India Limited, was incorporated in 13 August 1946 and taken over by the RPG Group in 1985 from EMI UK. The company is currently managed by R.P. Goenka, the chairman. It is engaged in manufacturing and sales of music storage device, Kavan, music cards, audio CD, DVD, and dealing with related music rights. It is also engaged in production and sales, telecast, broadcast of films and TV serials, pre-recorded programs, and dealings in film rights. We can see that the company net profit has been growing rapidly since 2021, with a significant increase. The chart on the left looks very institutive, and the development over the past 3 years has been very stable, with the growth rate of its net profit also being very consistent. Okay, Let's move on to the next topic, classic tactics. Actually, many friends have been asking me questions like, how do I screen for high quality stocks? Or how do I identify stocks that have potential for buying? Or whether there are any trading methods can be used. Starting today, I will be systematically and comprehensively share information with everyone. So please listen carefully, friends. What is daily limits and limit up? This is a topic that is very interesting. Okay, I think that most of you guys will want to learn something from this. Today I'm sharing a technique called daily limit and limit up. So firstly, we have to understand what is a daily limit or a limit up. A limit up is the maximum amount that the price of a stock, commodity, or index futures contract will be allowed to increase in a single trading session. This means that buying the underlying market is suspended by the exchange. So, you guys might ask, what does this mean? The price limit of a stock refers to phenomenon that within a certain trading day, the stock price rises to the maximum increase specified by the market, resulting in the stock price being unable to rise further. Okay, you can see this kind of chart, the candlestick. The stock limits refers to the phenomenon whether the stock price rises to a maximum allowed increase within a certain number of trading days, preventing it from rising further. Why does this occur? Everyone knows that for a stock price to increase, the buying power or the buying force must be greater than the selling force. When the price reaches the limit up, it indicates a significant bullish force that continuously pushes the price to a maximum allowed increase by the market. Achieving this upward price momentum requires substantial capital to buy in, which individual investors cannot accomplish. So, who can achieve this? Only large institutions, funds, and private equities with substantial capital can drive stock prices to that limit. This is the power of a capital just now when discussing the flow of funds. This point has been emphasized. When the first limit up occurs for a stock, it usually continues to rise the following day and may even hit the limit up again. Some stocks can be even experience multiple consecutive limit up. This indeed represents a huge profit potential. The purpose of driving stock prices to a significant capital is for profit. They are not willing to share their profits with other investors. So it's clear that they are not willing to let the majority of the ordinary investors to earn a part of this profit. If we can size these trading opportunities of stocks that hit the daily limit up, the profit gain in the short terms will be significant. Of course, it's very difficult. Does not mean it's impossible. As for the method, I will explain to you later. Next, let's learn about the various types of limit up. As I mentioned, there are various types of limit up, but today we only will discuss about single daily limit up, because this is the most common form of limit up. It occurs when a stock experiences a significant price increase within a single trading day and reaches the upper limit allowed by the exchange. Trading in stock is then temporarily halt to control volatility. Why so many people are very interested in researching stocks that hit their daily limit? The main reason for this interest comes from characteristic of these stocks having a tendency to continue rising after the first price limit is reached. Observant traders often notice that once a stock hits its first daily limit, it tends to continue to rise. For traders, this upward momentum represents a predictable opportunity for profit. So you guys understand? Okay. So let's move on. Okay, take a look at the chart. After the first daily price limit is reached, the price continues to rise, hitting multiple limits, which is here. This is the first limit. Okay, for the first day, then continue, multiple. Okay. For traders, as long as they can buy in the first time, or second, or even the third daily price limit, they can potentially earn substantial profit. So let's say if you can buy it here and sell it here, we can earn money. The same goes for the rest. Okay, of course, there are different patterns in stock movement, and not all stocks that hit their first daily limit will exhibit this kind of trend. However, we adjust our expectations, and even if we buy on the same day of the first daily price limit, we may still profit when the price rises on the following days, even if it doesn't hit another limit. Okay? It might be difficult to understand this concept through words alone. Let me show you another example that will make you all a bit more clear. Okay, let's take another look at this stock. The performance of this stock after the first trading at the limit up is completely different from the previous one. Okay, first daily limit. In other words, on the next trading day after the stock price hit the limit up, there wasn't a continuous limit up, which is here. It didn't continue. And it doesn't seem very strong. However, it's important to note that even so, if we could buy the stock on the day it hit the limit up and sell at the next morning of the opening, you still can make a pretty good profit. Over the long term, by accumulating profits day by day after a period of time, you can accumulate very good profit. Of course, none of us can make such trades every day. Otherwise, we can have the whole world. Okay, next. Okay, let's take a look. What are the daily limits stocks brings? Okay, you can see here, locking in profits, price momentum, potential for future gains. Okay, let me talk about the points. Buying a stock that has hit his daily limit, reaches the upper limit allowed by the exchange, can have potential benefits. Here are some potential benefits and considerations. Let's talk about number one, locking in profits. If you already own the stock and he has risen to its daily limit, and if our profit expectations are not too high, meaning that we are not too greedy about it, we can sell it at any time. Each trade may not yield high profits, but repeated profitable trades of this similar can accumulate into significant gains. Point number 2, price momentum. Buying a stock that has hit its daily limit may indicate strong positive momentum. Traders who follow momentum strategies may see this is an opportunity to capitalize on short-term price movement. As for the third point, potential for further gains. In some cases, stocks hitting their daily limits may continue to rise in subsequent trading sessions. If there is a positive news or strong trend supporting the stock, buying at the limit might position you for further gains when trading the halt is lifted. Okay, what can the daily limit stocks prevent? Why do we have this limit up? Okay, there are 5 points on that. Preventing manipulation. 2, maintaining orders, protecting investors, avoiding system overloads, and market integrity. Okay, let's take a look at the first one. Preventing manipulation. Limit up rules are designed to prevent potential market manipulation. Without such limits, a stock price could surge dramatically within a short period, allowing for potential manipulation by a small numbers of traders. Point number 2, maintaining order. Sudden and extreme prices movements can create disorderly markets, leading to panic among investors. Limit up rules help maintain orders by preventing rapid and potentially irrational price increase. Third, protecting investors. These limits serve to protect investors from extreme prices fluctuation that can occur due to speculative trading or sudden news events. By pausing the trading while a stock hits its limit, investors are given time to access information and make more informed decisions. Point number 4, avoiding system overloads. Rapid and extreme price movements can put a strain on trading systems and infrastructures. Implementing limits up rules help prevent systems to overload by temporarily halting the trading, allowing the systems to catch up and process orders more efficiently. And last of all, market integrity. Limit up rules contributes to overall integrity of the financial markets. They are parts of the regulator framework that seeks to ensure fair and orderly trading, which is essential for maintaining investors' confidence in the market. Okay, let's move on to the lucky draw event. Okay, I actually speaks about the lucky draw on my previous class. Okay, for those who previously didn't attend my class, okay, we have a lucky draw. So to join the lucky draw event, okay, please follow my assistant's instructions and send a screenshot of the lectures of this event. This event is actually open to everyone. Okay. So I will not go through the lucky draw event. This is the prizes. Okay, take a look. Total we have 5 prizes. Okay, and okay, friends. Today live sharing classes will end here. Thank you very much for your strong support. Remember to take the screenshots and of the live sharing class and complete the questionnaire, and then send it to my assistants to enroll for the lucky draw. Our next class will be on Thursday, 14 December 2023 at 8 p.m. I hope to see everyone here again. Okay, thank you once again for your support and good night.